Hey everyone, welcome back to Corporate Decoder, your go-to for decoding the secrets hidden within company filings. And today, we're peeling back the layers of Quartz Mountain Resources limited their annual report for the fiscal year ending the 31st of July 2025. It is quite the read, full of numbers and a fair bit of what you might call resource industry optimism. Before we dive in, if you dig getting the real story behind corporate jargon, hit that subscribe button. And hey, we've built a fantastic community on Discord where we break down these filings even further. Link is in the description. This document, a Form 20F, is basically an annual report that foreign companies file with the US Securities and Exchange Commission, or the CC, to give investors a look under the hood. Quartz Mountain is reporting for the year ending the 31st of July 2025. And it tells us they are operating under International Financial Reporting Standards, or IFRS. This is important because it is a different accounting language than what US companies typically use. Now, let's talk numbers. For the year ending the 31st of July 2025, Quartz Mountain reported a loss from operating expenses of over $3.5 million. This is up from the previous year where the loss was around $2.5 million. This increase in losses is mainly because they kicked off more exploration drilling on their Maestro and Jake properties in British Columbia. While nobody likes seeing losses in the resource exploration world, this is often part of the game. They are spending money to find valuable minerals. Looking at their overall financial health, total assets at the end of July 2025 were about $4.2 million. This is a healthy jump from roughly $3 million the year before. However, this has to be weighed against their shareholders' deficiency, which stands at a negative $3.9 million for 2025. A negative shareholders' equity, or deficiency as they call it, means the company owes more than it owns. This is a red flag that they are relying heavily on borrowing or issuing more shares to stay afloat. Their share capital, which is the money raised from selling stock, grew to over $37 million in 2025. This shows they have been successful in raising funds from investors, likely through selling more shares. When we look at earnings per S-share, it is a loss of $0.06 for 2025, which is worse than the $0.05 loss per S-share in 2024. This confirms the increasing losses we saw earlier. A higher per share loss suggests that even though they might have more shares out there, the company's overall financial performance is deteriorating on a per S-share basis. Now, something really crucial here called the going concern assumption. The auditors prepare the financial statements assuming the company will continue to operate, but Quartz Mountain explicitly states that without more funding, this assumption might not hold. This is a serious warning sign that the company might not be able to pay its debts or continue its operations in the near future. They acknowledge that if they can't continue as a going concern, their assets and liabilities would have to be valued differently, potentially much lower. This leads directly into their need for more money. The report clearly states they do not have enough funds to explore their properties. They will need significant capital for future exploration and development. If they can't get this money, it could mean they can't stay in business. And if they do get it by issuing more shares, existing shareholders will see their ownership diluted, meaning their slice of the company pie gets smaller. The risk section is a classic for any mining company. They talk about the highly speculative nature of finding valuable minerals. It is incredibly hard to find something profitable. They mention that few properties explored ever become producing mines. They also highlight risks like unexpected geological problems, fires, explosions, and the inability to get the right equipment or labor. It is a very dangerous, uncertain business. They also stress the difficulty in obtaining essential permits and licenses. Even if they find something valuable, they can't mine it without government approval, and this can take a long time, or worse, never happen. They also mention potential challenges with property titles, basically who truly owns the land and the minerals beneath it. For investors, the report warns that the market price of their shares can swing wildly. This means the stock value can go up or down dramatically, and it is not always tied to how well the company is actually doing. Think of it like a roller coaster, exciting for some, terrifying for others. Let's talk about what they are actually trying to do. They have several mineral properties, but the Maestro property seems to be the current focus. They acquired it and have been investing in drilling. They see potential for precious and base metals. They even compare the geology to the Blackwater, Davidson gold-silver deposit, which is a known producer. In what sounds like good news, their phase 1 and 2 drilling at the Maestro property has yielded some promising results. They talk about finding gold and silver. In drill hole PR23-02, they hit 102 meters grading 2.22 grams of gold per ton and 104 grams of silver per ton. That is significant. and it includes even higher grade sections. This discovery is open in multiple directions, meaning they might be able to keep drilling and find more. This is the kind of news that gets investors excited in this sector. Now, let's look at the people running the show. Robert Dickinson is the chairman and has been in the mining business for over 45 years. He is a big name, even inducted into the Canadian Mining Hall of Fame. He is also a director of several other mining-related companies, including Amark Resources Limited and Northern Dynasty Minerals Limited. This suggests a deep network within the industry. Looking at the share ownership, Robert Dickinson directly or indirectly controls a significant chunk of the company. As of November 2025, he owned over 22 million shares, which is about 33.66% of the company. This is a substantial stake, meaning his interests are very aligned with other shareholders. Interestingly, the Sutton Group Inc. holds a big stake too, over 18 million shares, about 26.54%. This makes them a major shareholder alongside Robert Dickinson. The combined ownership of just these two entities represents over 59% of the company. Now, for something that can be a headache for us investors, the report mentions that Quartz Mountain likely is a passive foreign investment company, or PFIC for us tax purposes. If you are a US investor and the company is a PFIC, it can mean complex and less favorable tax treatment on any profits you make from selling your shares or from dividends. You might end up paying higher taxes and even interest charges on those profits. They strongly advise us investors to consult their tax advisors about this. For us holders, dividends are subject to a 15% Canadian withholding tax, which can be reduced to 5% if you own a significant portion of the company. When it comes to selling shares, a US investor generally isn't taxed in Canada unless the shares are considered taxable Canadian property, which usually means you have a large stake in the company and a lot of its assets are in Canada. Overall, Quartz Mountain is a company in the very early high-risk stages of mineral exploration. They've made some potentially exciting discoveries at their Maestro property, which has led to increased spending and larger losses. They are clearly reliant on raising more capital, and the risk of not being able to continue as a going concern is very real. For us investors, the PFIC status adds another layer of complexity and potential tax burden. The big stakes held by Robert Dickinson and the Sutton Group Inc. do align their interests, which is a positive, but the fundamental business remains highly speculative. Unless they can secure significant funding and prove their discoveries are economically viable, the path forward is uncertain. Alright, that is our deep dive into Quartz Mountain Resources Limited's annual report. What do you think about their exploration progress and the financial picture? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a like and subscribe for more detailed corporate analyses, and don't forget to join the conversation on our Discord community linked in the description. Thanks for watching, and we'll see you in the next one.